Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss franc. Today's date is October 3rd, 2023. We're helped by lower inflation out of Switzerland, came in at minus 0.1% for the month. That was less than the 0.0% expected. So good news on inflation front. Then the Swiss franc has weakened as a result. In trading, last week we saw this is a 4-hour chart. We saw the price move higher. In the previous week we also saw the price move higher, and now we're seeing the price move higher again. The corrective move to the downside last week toward the end of the week, however, saw the price move below this swing area through here. This swing area encompasses the level between 0.9106 and 0.9115. And the price, these levels right here define that area back in this back in the May-June period. And in trading last week, the price moved above it and then moved below it here. But notice here what happened on Monday. The price came down initially in the Asian session on Monday, came down to retest that swing area, found support buyers against level and forced its way to the upside. Now, we did take out the high price that we saw in last week's trading at 0.92247, but momentum has faded and we've moved back below that level. Be aware of that, that in the short term, it may be that the inability to get and stay above that level is going to lead to further corrective moves to the downside in trading here today. It's still up for debate, but 0.92247 is going to be a key level to watch in the short term here for the dollar versus Swiss franc. Let's take a look at the hourly chart. And if we look at this hourly chart, we can see the reason why we found support on the dips both on Friday and again yesterday, stayed above the 200-hour moving average. That's the green line in this chart. The last time the price traded below that level was back here on September 20th, only briefly, and before that you have to go all the way back to this day right here, first day of the trading month. So not a lot of time below the 200-hour moving average going forward. Keep that level in mind. If the price does start to move lower here and get below the 100-hour moving average, getting below the 200-hour moving average would be a key barometer for buyers and sellers. It would be it would be the first time since this day, as I mentioned, and if we stay below that level, that would be more bearish for this currency pair. But until then, the buyers remain in firm control. Finally, let's take a look at the daily chart to see where we stand in respect to that. And going, not only did the 84 or 24 level, the 0.9224 high from last week was an important level, but if you go back in time to the last time the price traded at these levels was back here, and you can see that the high prices through here came also near the 0.9224 level. So that increases the level's importance, and the fact that we're just below that level, currently trading at 0.9220, is worthy of watching. So pay attention to that level in the short term here. It may give us clues for the future price action, not only today, but in the near term to the downside. We'll see if a corrective move can be started because of that failed break. There's a look at the dollar Swiss. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.